Welcome to Vector News 24. I'm John, and this is your live update on the financial markets at 10:30 a.m. New York time, Thursday, April 16, as the NYSE is fully underway for the session. U.S. equity markets are trading in a mixed but broadly positive range, continuing the risk-on tone that carried over from yesterday's close. The S&P 500 and Nasdaq Composite are both slightly higher, supported by another strong showing in major tech names, while the Dow Jones Industrial Average is tracking near the flat line, with some industrials and financials holding back the overall move. The key takeaway is that the market is still in a constructive uptrend, albeit with intraday volatility around every headline. From an economic data standpoint, the recent Producer Price Index release came in a touch above expectations, confirming that input price pressures are elevated, but the reaction has been muted. Traders are focusing less on a single hot print and more on the broader narrative that the Federal Reserve can keep the macro backdrop under control. Several Fed officials have delivered speeches this week, reinforcing the message that policy will remain data-dependent, which is helping to keep long-term Treasury yields relatively contained. The next important data points will be housing and labor market reports, which will give a clearer picture of whether the soft landing scenario holds. On the financial news front, earnings season continues to dominate sector-level moves. Major banks and several large-cap names have reported results that are shaping sentiment around net interest margins, loan growth expectations, and credit quality. So far, the tone has been cautiously optimistic, with many firms highlighting resilience in domestic demand, even amid higher cost conditions. This is helping to keep the financial sector sell-off in check and supporting the broader equity rally. Industrial and cyclical sectors remain more sensitive, as they are directly exposed to higher energy costs and the uncertain tariff environment. For investors, the key message from the U.S. markets right now is that this is a technical pullback within a broader uptrend rather than a fundamental breakdown. The S&P 500 and Nasdaq are consolidating gains after a recent surge, while the Dow remains more range-bound. Focus on how the indexes hold today's intraday high and low, as that will tell you whether the recovery is gaining traction or if sellers remain close to the surface. Now, let's turn to crypto, gold, and silver, and the mining sector story before we move to Asia and Europe. On the crypto front, Bitcoin is trading near the upper end of its recent range, hovering just below $75,000, with the Fear and Greed Index showing readings in the extreme fear zone earlier this week, but now stabilizing. The market is clearly trying to test support around the mid-$74,000 level, with a strong bid stack visible in that zone on-chain. If Bitcoin can hold above that support, the technical setup favors a move back towards $76,000 or higher. A break below $72,800 could trigger a short-term drop towards $70,500, but that would likely be seen by many analysts as a buying opportunity rather than the start of a full-fledged bear market. Ethereum is also showing resilience, trading in the mid-$2,300 range after a solid rebound over the past 24 hours. The broader altcoin and DeFi sectors remain under pressure, with total market capitalization hovering around the mid-$2.5 trillion mark, and on-chain activity reflecting repositioning rather than outright capitulation. Spot Bitcoin and Ethereum ETFs continue to see inflows, which is supporting the structural bullish case, even as short-term sentiment swings between fear and greed. Shifting to precious metals, gold and silver are trading in a firm uptrend. Gold is trading near record high levels, with some forecasts pointing to further upside in the near term as inflation and geopolitical risks remain elevated. The US dollar-gold relationship and real rate expectations are key drivers, and the current setup suggests that gold could continue to outperform in a risk-on with hedge scenario. Silver is following a similar pattern, benefiting from both safe haven demand and renewed optimism about industrial demand, especially as the global manufacturing cycle stabilizes. For mining stocks, the story is positive but nuanced. Gold mining equities have benefited from the strong tone in the underlying metal, with several large-cap producers trading higher and outperforming the broader market. Silver mining names have seen even stronger gains, as silver's price surge gives them extra leverage. However, base metal miners and some industrial-style resource plays are under pressure, reflecting the softer tone in broader industrial sector sentiment. Overall, the message from the crypto and precious metals markets today is that safe haven demand and risk asset positioning are both in play, but the balance is tilting more toward resilience than panic. That's consistent with the broader equity market tone we're seeing in the US session. Now let's move to Asia and Europe, where we'll cover the latest economic indicators, data analysis, and news. In Asia, The Nikkei 225 and other regional indexes are trading in a cautiously positive range, reflecting the constructive tone that flowed over from the U.S. session. Japanese exporters, including automakers and electronics firms, are leading the gains, supported by a relatively stable yen-dollar relationship and a backdrop of cautious monetary policy from the Bank of Japan. The Bank of Japan's message remains that it will keep yields low and support domestic growth, which is helping to cap any sharp moves in the yen and providing a broadly supportive backdrop for Japanese equities. Beyond Japan, mainland China's indexes are trading in a mixed to slightly positive range, as investors balance the impact of higher oil prices with expectations for continued policy support from Beijing. Hong Kong-listed shares, especially in financials and real estate, are trading with a modest gain, reflecting the supportive tone in global risk sentiment, even as higher funding costs remain a concern. The broader Asian session has been constructive, which is a positive signal for the later part of the U.S. trading day, because strong moves in Asia often feed into European and U.S. sessions by influencing futures and options flows. In Europe, the DAX, FTSE 100, and other major indexes are trading in a mixed range, with some sectors lagging the U.S. rally. The European Central Bank is in focus, as markets await the next monetary policy decision and guidance. Recent data from the Eurozone have shown signs of a slowdown, with manufacturing activity still under pressure, but the services sector remains relatively resilient. The ECB's tone will be key to the next leg of the European move, with any hint of a dovish tilt likely to support equities, while a more hawkish stance could weigh on risk asset positioning. From an economic indicator perspective, the week's PPI and related data from the US and Asia are reinforcing the narrative that input price pressures are elevated but manageable. The focus is shifting to labor market data and housing market indicators, which will give a clearer picture of whether the soft landing scenario holds. Any surprise in these reports could nudge the narrative and, in turn, affect bond yields and equity valuations. For traders watching the NYSE, the key takeaway is that today's move is being supported by a global backdrop rather than just a US-only rally. If the Nikkei and other Asian indexes hold their gains into the overnight session, it increases the odds that U.S. markets can defend their levels or even extend today's rally into the afternoon and tomorrow's open. Conversely, any sharp late-session reversal in Asia could spark more caution in New York. That's your update from Vector News 24 on Thursday, April 16th at 10:30 a.m. New York time as the NYSE trading session continues. Markets are cautiously constructive, supported by a rebound in tech, a mixed but manageable economic data picture, and a relatively stable backdrop in Asia and Europe. Crypto is consolidating after a recent surge, and gold and silver are holding their defensive roles as safe haven assets. If you found this breakdown helpful, make sure to like this video, subscribe to Vector News 24, and hit the bell so you don't miss our daily updates. We're here to bring you clear, no-hype coverage of the stock market, economic data, financial news, crypto, and the precious metals and mining sector markets every day. Thank you for watching. Until next time, I'm John, signing off.